Hi everyone. So I've just got off the phone with Mike Creedon at SDI Group, which is out of England, and they're a serial acquirer. Just like I did with Technion, I've interviewed Mike and asked him some questions, and we had a really interesting chat about how he is running his business there, and I love how frank and open and honest he is about his business, and I hope you really enjoy this. I got a lot out of it. I always get a lot out of these types of interviews, and hopefully ask some interesting questions. All right, enjoy. Thanks, Mike. I'm just going to jump straight into questions, and
Okay.
we'll see
Go
where
on
this
then.
goes. Hey, I
Yeah, that's
tried
fine.
to think of some better questions from last time we talked, so hopefully we'll just see how they go. So
Okay, let's do that.
one question that I think I wanted sort of repeated though before I jump into my new questions is, what can you say again to me what your personal goals are for the business?
It hasn't changed, and that is creating shareholder value. That's my personal goals. Not for me. I'm not that bothered about me, but it's for the shareholders. At the end of the day, I actually run a company for the shareholders. So I'm adamant that I have to stick to that goal of creating shareholder value. It's irrelevant what remuneration or package I earn. It's what's in the best interest of my shareholders, because they own the company.
What do you think moving forward to create that shareholder value? You've done a great job so far for the last decade.
Yeah.
The next decade, in terms of like scaling this further, and what do you see as sort of the challenges for that?
Well, the main challenge is somebody to help me, really. We've got a good CFO, Amy, who started to replace John. We've got a financial controller in place, but it's somebody who can actually travel around the subsidiaries. That's the niche we have. After talking to sort of David Sickerell from Judgement Scientific, he was of the same opinion. So now he's actually brought in somebody from Halma to do that job for him. But for me, it's permanently out on the road. So I've got two jobs as a CEO. One is an operational role, and that is I buy the businesses, or I'm excuse me, the main focus on the businesses, and so people like to see me. And the other area is M&A. So as you well know, I complete all the M&A myself with the help of Amy, and so I think that's how it should work. Regarding growth, if a bigger deal comes along, fine, we will actually pursue it. But what we don't want to do is to take our eye on the niche businesses we've actually got, because I think we've acquired now 15 businesses over the years, making profits up to sort of $1 million, $1.5 million, and it works well. What we don't want to do is really to get it wrong. That's my major concern, which I've actually spoke to many shareholders on. It is getting too big, too cocky, and therefore you're buying the wrong business. If it's private equity, Andrew, they can get away with it. But we can't get away with it on the stock market. People are very bright and they can see through our numbers. So all the smoke and mirrors has gone now. We have to show, on the acquisitions, we have to show all the face-to-face deals. We have to show all the numbers on the acquisition. So you can't hide things these days in the accounts, and rightly so.
Okay, so let's imagine it's 10 years time, and the business doesn't exist anymore because it went to zero for whatever reason. Why do you think it went to zero?
I can't see it going to zero. I really can't, because we're in so many different areas. If it was just one manufacturing plant making widgets, and we have supply issues, or the customers' new technology took our business, then I'm sure it'll be a failed business. But we're in 13 different businesses across so many different sectors. Where one sector's not doing very well, the other one's picking up. So I find it difficult, to tell you the truth, that this thing's going to go into liquidation or administration. We buy profitable businesses; they're all profitable at the moment. 10 years time, I don't know. We can't look at a crystal ball, but currently all businesses are doing very well. We all have supplier issues, but I can't see it. It's just me. I just can't see it failing. It may do after I've gone and somebody else comes in and changes the format. Maybe so, but under my authority, no, I can't see it happening.
Yeah, that's an interesting point. So maybe something could go wrong by the person you hire into that you're trying to get to replace you, and you do a bad hire.
Yeah,
That could be a reason. Maybe something like
yeah,
that.
yeah, true. But that's out of my control, then, Andrew.
Yeah, cool. Great. In terms of this is going to get a bit more nuanced to the specific situation of the business, but in terms of your free cash flow, how much of that would you like to spend each year on acquisitions?
Most of it, to tell you the truth, because if you have a look at our balance sheet and what we actually buy in the way of capital equipment, it's very limited. All our businesses are nice niche businesses, not spending a lot of capital on those businesses. We invest in R&D, but we don't actually capitalize it, or we do capitalize some of it, but not a lot. So really, the net effect on cash flow is nil. So it's using the cash wisely on buying acquisitions. If I couldn't find an acquisition, then, as I said to you before, I report into the shareholders, and I'm going to give them their money back as a dividend, Andrew. It's not my money, so I'm going to use it wisely.
Yeah, cool. So that would mean that acquisitions would be priority, dividends secondary. Is that kind of how you think about dividends?
I do, and that is down to, well, one, me, but two is the shareholders. Even the retail shareholders actually think that they'd rather take the capital growth, i.e. capital gains tax at 20%, than taking dividends to sort of 45% plus national insurance nowadays. So they'd rather get the capital growth in the business. And we're not that type of company. I think that's why people like the IHTs are not investing in us, because we're not a dividend company. We have to use the cash wisely to create capital growth. Because what I don't want to do is actually to say, okay, we're going to try and get on this dividend hamster wheel. As soon as you get on, Andrew, you can't get off. And what actually happens is we give dividends on one hand, and then we find an acquisition, and then we have to borrow from the bank. Well, that's absolutely daft, really, at the end of the day. So I'd rather actually use our cash wisely on the acquisitions, and my shareholders are happy with that, and that's what they want.
Awesome. Yeah, okay. Anyone who follows my channel would know that I think dividends need to be the last option possible. So yeah, that's cool. I agree with that. That's nice.
Well, it's tax. It's tax on dividends. Correct. It's horrendous. It really is.
Yeah. In terms of acquisitions, what have you been seeing? What are you generally aiming to pay for an acquisition? And when does the multiple sort of get too high?
Well, we're paying currently. We started paying up 3.5 to 4, somewhere around that sort of stage. But now we're getting up to 6. We're getting up to 5 to 6 times multiples. We haven't gone over 6 yet. We're looking at some at the moment, still in just on the border of 6. I'm sure it'll come. As my chairman actually said, we're going to have to pay 7, 8 times. If you look at Judges, recent acquisition, very profitable business. They're paying 7 times. So we have to be realistic, at the end of the day. We have to be flexible. But what I don't want to do is to go into a pricing war with private equity or paying 8 to 10 times. We can't deal with that.
Yep, cool. I think that's wise.
Yeah.
I asked you this last time, and we both were sort of like, not really sure how to answer this question. But what do you think's a pretty solid way to measure the fair value of your business?
Oh, this was difficult, wasn't it?
Yeah, we both got stumped. And you even said
both got
TIKR at Judges also doesn't really know.
No, it's difficult because we're a buy and build. If you look at the breakup value of our businesses, it's less than our market cap. Because the wonderful word is synergy, I suppose, for it. But it's such a difficult call for this. We've looked at it and we've spoke about it many times, but I just can't see how you can actually look at the fair value. If you look at the fair value of each business, then our market cap should go down, really. But what people are hoping, is we'll gain synergy. And that's what's attractive to the stock market, at the end of the day. We're buying businesses at 4 to 6, but we're trading at, 15, something like that, 15 to 20. Yeah, that's what it's about. It's arbitrage, isn't it? So.
Yeah, most regular people like myself, for example, would find it difficult to get a deal for 4 to 6. We don't have the the capabilities to do something like that. So that's the arbitrage opportunity, is we're getting access to
Correct.
that you can get access to through you.
Yeah, because we're buying private companies, and yeah, the market value of those is a lot lower than a business on the stock market, and that's what we've been doing. It's financial engineering at the end of the day. But
Yeah, it's very.
we still have to create organic growth.
That's the interesting point. Is it's not just financial engineering, because like the arbitrage is there, it's obvious, but
Correct.
it is about the organic growth. So maybe talk to me a little bit about what's why that's so important.
Organic growth. It was when my non-execs, David Tilson, actually raised that issue. And also, if you look at, there's a company called Constellation. I don't know if you've heard of it. It's a software business, and it's been buying business after business. It must have bought, I don't know, hundreds of businesses. But they're finding it difficult at the moment, because all they did was buy businesses using arbitrage. But now everybody's questioning it. Where's the organic growth? Because what we don't want to do is, I think that's where people get rather annoyed, is just to buy a business and just sit on it and say, this is what it's going to do forever. We want to actually invest in these businesses, whereby the the previous shareholders or owners work 5 days a week. They're making a good return, let's say £500,000 in cash a year. They don't want to actually invest anymore. They don't want to go up to the next fixed cost, a fixed step cost within their businesses. But we do. That's what we do for our businesses. Good example, I think I mentioned to you before, was Centec. Had 2 buildings based in Braintree. We've got a third one. And it used to have 40 staff. I think it's got nearly 70 staff now. So we're invested in that business, and that's what we do. We invest in those businesses to try to create organic growth. And I think that's what we'll take the gamble. For a shareholder who's making £500,000, £1 million a year, he's happy with that. He can go home, sleep at night, he's generating the cash. But for us, it's not good enough. We actually want the senior managers underneath the shareholders to say, what do you need to do to take it to the next level? And that's what we do. We're there to invest in these businesses. And usually, Andrew, it's not a lot of investment. It really isn't.
Very interesting. When you do talk to investors like myself, what are the biggest misconceptions they have about the company?
I don't think it's misconceptions. I think, when we do Investor Meets Company, we had feedback from people, and people don't like conglomerates. That's the feedback I'm getting. They said we've done a great job, but people don't understand how this works, how this business model works. I think a lot of the shareholders would want a manufacturing business like us, turned over 50 million a year in 1 or 2 units, making the same amount of profit. They can understand it. People can't understand how our business model works, and they can't get their head around it. But that's my job. That's what I have to do. We've actually got, if you have a look at our annual report, a spider's web of companies. But it works, it actually does work. Each of the businesses talk to each other. A good example is LTE Scientific we bought a few months ago. That's talking to 2 of our other subsidiaries to say, how can we actually market their products in line with, let's say, Monmouth or Synoptics. So as you get bigger, it's like Halma, same thing with Halma. As you get bigger, you can actually put these businesses together, all standalone autonomous units, but they work together, and that's what we do. That's our sort of niche of what we try to achieve, really.
Cool. Since you've come in, it's been over a decade now. What do you think the biggest changes? What have been the biggest changes to the company since you've started?
I don't think there has been that many changes. I think the biggest change for me, to tell you the truth, I'm a qualified accountant, and that is I am really pleased I'm not a finance director anymore, because some of the changes going through in the way of standards is ludicrous, and the amount of work we have to do to go through an audit is absolutely horrendous. This year, it was a shock to me how much work we have to go into it. I think it's because it's such a libelous country these days. Everybody's been sued, so they have to make sure that all the audits are nice and clean. For my job, it doesn't change. I think my job is actually quite straightforward, really. It's going to the subsidiaries and just asking them what problem they've got, what help they need, do we need cash, and they like that sort of thing. So for my job, it's fine. I'm just going down the tree to say the CFO and the finance controllers, they've got a hard task on their hands. That's what I'm seeing in the business. And also, if you have a look at it, a lot of the businesses we buy are unaudited accounts. So we have to have these audited. And now we're getting, what have we got? 15, 16 businesses audited. You know, it's difficult, and you get these little businesses with an AAT qualified or semi-qualified accountant. In fact, all our accountants are actually women or ladies within all the subsidiaries, and it's new to them. You know, stock takes, all that sort of thing. So that's what I think the biggest change is for us is the auditing side, and it's so complex these days. The rest of it is fine. It's fine.
That's really interesting. That's yeah, I can see that being a bit of a headache. In terms of, I think I was trying to get at with the question more about like company culture. How would you describe sort of like the change in culture that you've been able to imprint into the subsidiaries and into head office and all that stuff?
There's no change. You know, that's the biggest area where people like us and want to sell the businesses is the culture doesn't change. As I said to you, I get to work in a t-shirt, pair of jeans, and speak to everybody. There's 450 people in the group. Everybody knows me, knows my number, and it works. Yeah, we don't actually instill sort of a strategic. We don't actually bring in sort of rules and regulations of a big corporate. It'll kill us. It really will. So when we actually buy businesses, we actually know from the outset the culture is virtually the same as every other business we've actually got, and that's what we want. We're not in there to. We're not politically minded at all.
Why do you think it'll kill you if you go in and make changes to culture?
That's what happens. I've worked for as a finance director for companies being taken over by the Americans many years ago. They say, "Oh, we're going to leave you as you are for 12 months." They put the hobnail boots on, put a big ERP system in, and all you're doing is filling numbers in. You know, at the end of the day, you're a box filler at the subsidiary level, and all the decisions are made at head office. And I've said under my leadership, that won't happen. You know, at the end of the day, what we actually do provide these guys is a template for the management accounts, which they come out will be coming out end of this week, which is very straightforward. And we've got a banking. We do all the centralized banking, but apart from that, these businesses run themselves. You know, and I think if you actually put a big corporate structure over it, I don't think these businesses will survive. You know, because at the end of the day, we want these R&D engineers, production people, you know, to think outside the box. What we don't want is people box filling. You know, that's not us, really, to tell you the truth.
Awesome. I fully agree. What one thing do your competitors have a hard time copying?
Oh, that's a difficult call. Trying to do the because there are a number of our businesses that we haven't got any competition. You know, that's the beauty about our businesses. You know, if we look at Centec, you know, we produce sensors, but we actually use, as mentioned before, the old traditional glass blowing to produce these quality sensors. So, and a lot of our work is OEM and service work. So I think if we can actually maintain the quality and standards within our companies, you know, competition doesn't get near us, to tell you the truth. I'm just trying to figure out when I go through all the subsidiaries. I think one of the main ones is Synoptics with their gel dot. You know, the biggest competition you've actually got there is Biorab, which is a US company. But a lot of our businesses, like we said, we're so low down the scale. You know, we don't actually sort of hit any other businesses. I'm sure Monmouth do with their laminar flow cabinets, etc. But yeah, I don't think we're that bad, really, to tell you the truth. And also, I think it's a good question, and this is what we're going to raise at the strategy meeting in about sort of a month's time, because are we seeing competition now in the marketplace, especially for Attic? Attic's done really well, as you can see. You know, are we seeing competition for our cameras at the moment? And that's what we're looking at. I think we are. I think we are from the Chinese, but what people want to do is to buy European products. Even the Americans do as well. So I don't see, you know, we're actually we're losing out on the competition, really. I think it's a difficult call. Yeah, I think really, Andrew, as well. But we're in so many different businesses. It's difficult to actually pinpoint where the competition lies. If you look at Astles Control Systems, you know, there's got Henkel there, but we're so low down the chain on a lot of this on our products that people don't look at us. You know, that's why when we actually do accounts, file accounts at Company's House, we only file the balance sheet, because we're such a niche, you know, highly profitable business. What we don't want to do is to show our competitors and our customers sort of the margins we're making. But it's very, yeah, I don't think we lose out that many on that many deals. tell you the truth. And I'm just actually thinking as I go through in my head the monthly operation reports, and it's very rarely, we actually say on the order side that we lose out on an order. To tell you the truth, I'm just trying to figure out from all the sort of 13 businesses we've got, and I find it hard to believe that we lose out really.
Yeah, awesome. That's the attractive part, I think, of SDI Group from my point of view as an investor. Is I think the niches are really interesting little spaces they're all in, and I like the little monopoly kind of feel that they have. I know you'd always argue they're not monopolies, but there's not competition in a lot of these spaces.
Correct. A classic one is Grass Kills Optics. That's a dirty business. We're actually chemical etching using sulfuric acid and cyanide tanks. People. Our customers have actually moved away from that, and they want us to do that business because of health and safety. The big companies like Amatec or Taylor in Leicester, one of their subsidiaries, have moved away from it. They would rather us do it because of health and safety. But we've actually commanded that niche now, and it's grown very well. So a lot of people don't want to do that. Sentech with glass blowing, who wants to do that these days?
Yeah, I don't think there's a rush of university students coming out starting those businesses anytime soon.
No, that's true. What we've actually got now is apprenticeship schemes in place, especially with the glass blowing, and we're looking at it for the welders as well, because a lot of people these days, majority of people these days go to the university, they get a degree, and they think they can walk into a job which is far higher than these guys. At the end of the day, they want to find a nice office job at 50 or 60,000 pound a year. My daughters did that wrong. You have to start at the bottom, and that's what we're finding. There isn't apprenticeship schemes around, which is a shame, really. And that's what we're trying to build within our business: apprenticeship schemes. A good example is plumbers. Try to get a plumber in the UK, it's impossible.
Yeah, Australia is the same. All right. In terms of what I got next, how will you achieve the growth targets over the medium to longer term? What's the plan?
Well, each business actually sets its own budgets, to tell you the truth. And that's what we publish in our broker's notes. So we don't actually publish any forecasts regarding acquisitions. It's purely on our businesses. So we hand that over. So it's not passing the book or anything, but we hand it over to our businesses to say, what do you need to do to attain organic growth? What investment is required, and we give it to our our subsidiary directors. They're paid handsomely, and they're rewarded handsomely if they actually overachieve, and that's what we try to do. My job is really, as well as they do in the organic growth, my job is to acquire businesses, and that's my job. So my job, as I said, is twofold. Is one, to say to them what cash or investment is required to attain organic growth. And number two, on the other side, that's my job, is to say, well, what do we need to buy to still continue with this M&A trail?
Speaking of the M&A trail, let's say you find a really interesting business and they're interested in selling. Why are they choosing you over a PE firm or even Judges? Like, what do you feel like is why would someone go with you guys instead of someone else?
We're not paying top dollar either. The main thing is the shareholders really want to release equity. That's their number one. But number two, which is, in my opinion, equally important, is they want to find a good home for their employees. They've been running these businesses for 20 years, and the employees have been there. And that's what we do. We actually say this business will not change. A good example is LTE. We acquired in July. John Lee's actually said to me, he's pleased I'm on holiday. I'm not turning up, once every sort of 2 or 3 weeks, because we've actually said, we run these autonomously. So, I'll go out there every 4 to 6 weeks and spend a day or 2 days there telling people what goes on. But that's for us. That's what people like about us. We're honest people. We're not politically minded at all. I think, and also when we go with a deal, I never change the deal. So if we agree on a multiple for goodwill, I won't chip away at it like private equity will do. We'll run with that. In a number of instances, I've walked away from a deal to say I can't actually, from due diligence, I feel uncomfortable. But in the majority of circumstances, we're happy with that deal, and so are they really. And also, if you have a look at it, we pay cash. There's no loan notes, there's no funnies. We pay cash for the goodwill. The only area which we do get into some discussion with is the balance sheet, because these companies we acquire are unaudited accounts, so you can guarantee when you start looking through the debtors plus 90 days, I'm looking at one at the moment, there is debts on there, quite significant debts. They're not chasing. And in a couple of circumstances, we'll find that they're probably gone into receivership. And the other area is stock. At the end of the day, it's slow moving stock. When they complete unaudited accounts, they don't have to look at slow moving stock. I can just put a figure in there. We need to. At the end of the day, we've got our auditors grant thought, and we'll go into that. And so what we have to do is prior to buying the balance sheet is to go through those stock figures. They're the two issues to see through. It always has been for our businesses. Is those, but we're fair and honest. And also, if you have a look at it, our businesses, the founders are still there in the majority of circumstances. They still want to come to work every day. Kenny from Centec, we bought that business in October 2015. He still comes into work sort of 2 or 3 days a week. That's what they want to do. But they want to make sure that they've released their equity, because succession planning, there isn't any, because a lot of the kids these days go to university. They don't want to work in a glass blowing factory. They don't want to do that. Peter Assel's, I think I mentioned this before, you've got 3 kids. They don't want to be involved in this engineering plant, which is making £1 million a year. So we're a good home for these guys. And also as well is what we actually do is on the acquisition trail, we pull in our subsidiary directors as well. Peter Assel's, he comes out with me. He's an engineer, and then he can do some technical DD. So it's a nice family. It seems to work. I think one of the points going back to you to right at the start is how we still continue with this culture as we grow. I think it'll become more and more difficult, Andrew. I really do, as we add more businesses on.
Yeah, it's good to hear you be very honest about that and be clear that that's the challenge moving forward. And there's always going to be a challenge. So that's it's good to see. That's what I would imagine is the issue with any serial acquirer businesses, is the more acquisitions they make, and it's just going to get, it just gets more difficult because large numbers.
Yeah, that's true. But also as well, I'll probably need somebody to help out for that, help out going around the subsidiaries. But it's finding somebody who's got a similar mindset or culture like me. What we don't want is somebody who's a head office chap. It just won't work. Who speaks over the top of people. It just won't work in our business. So you just need somebody who's down to earth and can talk to people. It's straightforward, but whether there is anybody out there, I don't really know, to tell you the truth. Good example is I'm out the road 4 days a week, and I thought my finance director would actually go out a lot more, and the financial controller is going out more, but they're not going out as much as me. Whether people want to do that, it's not very nice, just going out at 7 in the morning and they come back at 7 or 8 at night from a road trip, or staying out 3 or 4 days a week. But that's life. I love doing it. And it's trying to find somebody who can actually look at that, at my job, and think, oh, that's interesting. I'll carry on what Mike has done. We're not talking about it at the moment, but I'm sure there'll come a time when somebody can actually do that.
Cool. What type of car are you driving?
I drive a Mitsubishi Barbarian, a truck.
I don't even know what that is, but a truck. Cool.
I drive a truck. It's an L200 truck. Like the Ford Ranger.
Oh yeah, I know the Ford Ranger.
I drive one of them like that. Because
Cool.
I used to, I haven't ridden horses for sort of 12 months, but I ride horses. I'm doing up my partner's house at the moment, so I like driving a truck. So I'm not into sort of fast cars or anything like that. It does the job. My wife's got a Tesla, but and I've never driven it. I like driving my truck. What do you drive?
I don't have a car.
You don't?
No, I have a bike, actually, a little bike.
Oh, push bike.
No, like it's a PCX. It's like a 150cc.
Oh, moped.
Yeah,
moped thing. Yeah. Oh, that's cool.
Yeah, but I'm in Bali. That's Bali life.
Oh yeah, that's true. Yeah. So for me, no, I'm not. And now with the diesel so expensive, it's cheaper for me to hire a car, because the mileage on my truck just it's ridiculous. When you're talking £2 a litre.
Right.
Diesel.
Yeah, that makes sense.
So
yeah, of course.
I just use a petrol car and just hire it.
Yep.
And these days, it's no point having a company car. So I'll be on a local car hire firm. I'll pick a car up Thursday and then drop it back Friday. It's a lot easier for me.
Nice. All right.
I'm very cost conscious, Andrew.
Yeah, that's good. I love it. It's nice to be frugal. I'm a frugal guy.
Same as me.
Yeah, very good. All right. Bit of an obscure question for you, just because we don't have to talk business all the time. Who would you invite to dinner? If they're dead or alive, doesn't matter. Who would you invite to dinner?
That's a good one. Well, definitely one of my tennis heroes would be Andre Agassi. Did you watch the US Open?
Yeah, I did. Yeah, Alcaraz.
Amazing.
He's pretty talented guy, isn't he?
Yeah. I would invite, as a matter of interest, Warren Buffett, because I've read his book, The Snowball. I still think he's a fantastic individual. And probably Bill Gates, with his charity work. It'd be quite interesting to talk about that. He's earned a lot of money, which is irrelevant, really. It's what he is actually doing, trying to change the world. That's all I can think of at the moment.
Oh, they're great ones. That's a great list. I want to come to that dinner as well. Cool. Look, Mike, that's pretty much it. I've appreciated your time a lot. Look, people would know on my channel already by now, by the time I put this out there, that I've already invested in SDI Group, and I'm on board for the ride here, and I look forward to following along for the next decade or two. And I really like what you're doing, and I hope you keep it up and for as long as you can.
Oh yeah, we'll do. It's good fun.
How many years do you think you got left in you?
I haven't really thought about it, to tell you the truth. I don't think like that.
Yeah.
I don't think I need to. I think it's when excuse me. If the business starts changing, I hope it won't change.
Yep.
At the end of the day, I think we've got a good business model here, and I think it should continue like that. And I can't see why it shouldn't change, really.
Yeah,
I think we're doing a good job.
That's right. If you're happy, then that's great. That's all you need to worry about.
That is true.
Yeah. Awesome. Thanks, Mike.
Okay.
Thanks a
you,
lot.
Andrew.
Yeah, appreciate your time. Enjoy the last day of Turkey, and don't get sunburned again. And
I won't.
I'll talk to you more soon. Sure.
Yeah. Take care, Andrew.
See you. Bye. Thanks.
Bye.